Hello everyone, my name is Siddharth Khemka. I head the equity research for the retail business at Motilal Oswal. First of all, I would like to wish everyone a Merry Christmas and a happy 2019. Coming to the markets, equity markets last week were showing good strength until the last day of the week where it declined sharply on back of global turmoil. Nifty lost 0.5% to close at 10,754 on a weekly basis. The mid and small cap indices outperformed with gains of 0.6% and 1.6% respectively. The bank Nifty ended with marginal gains of 0.2%, mainly led by the PSU banks, which gained 1.8%. PSU banks were in limelight last week on expectation that the government is likely to announce additional funds to the tune of 41,000 crores for the ailing PSU banks in terms of equity. In terms of sectoral performance, the trend was mainly mixed. Metals, auto, pharma and energy were among the major gainers, while among the losing sectors were IT, media and FMCG. In institutional activity, FIIs bought 1,050 crores worth of equities, while DIIs sold almost equal amount of equities for the week at 1,141 crores. In last week, indices continuously rose for the first few days with positive developments like the RBI announcing additional OMO purchases which infused liquidity for the banking and NBFCs, the PSU bank recapitalization news, crude oil falling from $61 per barrel to $53 per barrel, down almost 30% in a week, and a stronger rupee which ended at 70.14 against the US dollar. However, fears of a slowdown in US and China, the lesser dovish stance by US Federal Reserve, and a partial US government shutdown spooked investors across the globe. This led to a massive selling in Indian markets as well on the last day of the week, with Nifty losing almost 2% in a single day. Some of the other developments for the week were the GST Council has opted for incremental reforms, lowering rates for as many as 23 goods and services, of which 7 were from the highest tax slab of 28%. The government has proposed to infuse capital worth 41,000 crores for ailing PSU banks in addition to the 65,000 crores which have been budgeted for FY19. Globally, the US Federal Reserve further raised interest rate by 25 basis points, which were on expected lines. It has now forecasted for only 2 rate hikes in 2019 compared to an earlier forecast of 3. Further, the US Fed has signaled its tightening cycle is nearing an end in the face of the financial market volatility and slowing global growth. Back home, the newly elected chief ministers of Madhya Pradesh and Rajasthan have cleared proposal for waiving farm loans totaling 53,000 crores as promised ahead of the state elections. The outlook for the domestic macros have turned positive in the recent times with fall in crude oil prices, strengthening of Indian rupee, softer inflation and a pickup in the growth of the industrial sector. However, global factors such as the partial US government shutdown, political instability in the US, and concerns over growth, especially in countries like US and China, could keep equity markets in India under check. Hence, we expect the market to remain range bound this week, which would be truncated because of the Christmas holidays and would also get impacted because of the FNO series expiry. Key sectors that would be in focus this week would be banks, NBFCs, IT and FMCG. Technically, Nifty formed a big bearish candle on the daily scale on Friday and an inverted hammer on the weekly scale. The mechanical indicators like RSI have now given a negative crossover, and if Nifty sustains below the 10,850 zones, then the short-term trend could turn negative for a decline towards 10,650 zones. On the upside, the key resistance now stands at 10,950 and 11,000 zones, which would remain as a big barrier to change the medium-term setup. Thank you.